Welcome to This Explainer. Okay, so today we're peeling back the curtain on a highly confidential SEC document. At first glance, it looks like just another boring list of financial positions, but hidden right there in the paperwork is a huge paradox. It's something that should honestly make anyone who has put money into AI stop and think. The young prodigy who literally told the entire world to bet on artificial intelligence, well, he just placed a massive, and I mean massive bet against the very machine he helped build. So let's unpack exactly what's going on here. $8 billion. Just let that number sink in for a second. That is the sheer scale of the theoretical bet placed against AI chips. And we're not just talking about any chips, we're talking about shorting NVIDIA. NVIDIA, the absolute undisputed queen of this whole AI race, and the very heart of the sector where millions of everyday savers like us have parked their money. So how on earth does a leading AI insider end up shorting the industry's most popular trade? To understand his strategy simply, we actually have to step back. We need to rewind about 2 years to a room where a young man is being abruptly fired. And that young man is Leopold Aschenbrenner. We're talking about a true prodigy here. Age 15, he enters university. Age 19, he's graduating at the absolute top of his class. By his early 20s, he finds himself on the inside of OpenAI's elite safety team. This is the highly specialized group tasked with keeping AI from becoming, well, dangerous. But while he was on the inside, he saw something deeply alarming, and it's a realization that leads directly to his explosive termination. See, Leopold wrote this memo warning management that the company's security was basically a leaky sieve, and you have to understand the context here. The secrets they are protecting aren't giant physical blueprints. They're digital files. The entire brain of an advanced AI model can literally fit on a single USB drive. Think about that. If a state actor steals those numbers, they don't have to spend years doing the research. They instantly possess what might be the most powerful weapon of the century. Leopold firmly believes we are not in a tech race, we're in a geopolitical war, honestly akin to the atomic bomb. And this exact belief became the foundation of his now famous 165-page Silicon Valley Manifesto. And the mathematical reality that Leopold lays out in that manifesto is frankly terrifying. Between 2019 and today, AI computing power didn't just double or triple, it grew by a factor of 100,000. 100,000 times. But his most alarming prediction is that this exact same exponential jump is going to happen again by 2027. He isn't guessing. He's simply following the data. And the thing is, when a machine becomes that astronomically powerful, its fundamental nature changes entirely. Right now, today, when you ask an AI a question, it gives you an instant, almost gut response. It's a lot like a human instantly blurting out 4 when you ask what 2 plus 2 is. It's essentially a highly advanced email assistant. But tomorrow's AI? It's going to operate completely differently. It will stop, reason, and think for what would be the equivalent of weeks of human labor before it ever gives you an answer. It'll act like thousands of tireless researchers working day and night. But here's the catch. Powering an entity that literally never sleeps requires an unprecedented amount of resources. Which brings us right to the energy bottleneck. All of this continuous, non-stop reasoning requires data centers so massively huge that they practically need to be built directly next to nuclear power plants. And when AI giants start consuming electricity on that scale, the fundamental laws of supply and demand kick in hard. You know that little knot you get in your stomach when you open your personal energy bill? Yeah, well, that is increasingly connected to the massive appetite of these new data centers. I want you to keep the word energy in your mind because it is the absolute key to Leopold's entire financial strategy. So here is the simple breakdown of this seemingly crazy market move. He is not saying that artificial intelligence is a bubble that's about to burst. Not at all. What he's saying is that the positioning on AI chips is a bubble. The market is just totally overcrowded. Everybody and their mother bought NVIDIA and similar chip makers. So he is shorting that crowded chip market to follow where the real money actually has to go next, the new bottleneck. And that new bottleneck is energy to feed the machines and memory to retain the information. He's not walking away from the AI table, he's just sliding his chair over to where the unpriced value actually is. But we really need to analyze the real risks for anyone investing in this space right now. Let's start with how a 24-year-old even manages to take an $8 billion position. The truth? Those $8 billion are a theoretical value achieved through heavy financial leverage. His actual capital is just a fraction of that enormous figure. And look, leverage is great for amplifying gains, but it dramatically amplifies your risks too. Plus, you have to remember that SEC filings are basically photographs of the past. By the time you and I are reading them, A highly leveraged trader might have already exited the position entirely before we even had our morning coffee. So what does this all mean for us? How should everyday retail investors interpret this? Well, if you're suddenly feeling the urge to rush out and liquidate all your tech holdings, just pause for a second. Rule number 1, you are not him. Leopold operates on extreme insider knowledge and highly dangerous leverage. If you are an everyday saver who is steadily buying pieces of the global economy over decades, you're playing a completely different sport. His short position is not a fire alarm telling you to panic sell your ETFs. It's just a cautionary bell ringing to say, hey, this specific sector has run a little hot. And it's absolutely crucial to remember that nobody is infallible, right? Even prophets have blind spots, and Leopold has definitely miscalculated before. Just recently, he placed big bets against AMD right before their stock surged 70%. And he bet against ASML, the Dutch monopoly that literally holds the keys to global chip manufacturing. Because in finance, being right about what will happen is only half the battle. Being right about when it happens, that is by far the hardest part of the game. So if we take Leopold's core thesis and apply it reasonably, the most actionable takeaway is that we're transitioning into a new, incredibly boring gold rush. The real long-term value of the AI revolution might not actually be the glamorous tech names making the front-page news. It's probably going to be traditional legacy industries. We're talking energy production grids, raw materials, rare earths, and physical network infrastructure. These boring, robust physical assets are the ones that are going to be left standing strong long after this initial hype cycle fades away. Ultimately, this whole story teaches us a really profound lesson. The financial market is not some infallible AI oracle. It is just a mirror. It simply reflects the collective fear and the collective greed of millions of humans deciding to hit buy or sell. Sure, artificial intelligence is great at processing data, but it's only ever looking in the rearview mirror. It cannot predict the future because markets are driven by completely unpredictable human behavior. At the end of the day, investing remains a deeply, deeply human endeavor, rooted in trust and emotion. Which leaves us right back where we started, looking at that $8 billion bet. The very man who sold the dream of AI recognized exactly when the trade became way too crowded and when it was the right time to be cautious. The difference between those who successfully grow wealth and those who lose it isn't just about having the best technical knowledge. It is about having the emotional self-awareness to stay grounded when the market is screaming at you. So consider your own portfolio right now. Are you investing with genuine self-awareness based on real fundamentals, or are you just blindly buying into the noise of the crowd?